We live in a gambling economy, and I think everybody thinks, this is the one I can outdo everybody else.
Hello, everyone, and welcome back to the Crypto Playbook. I'm Jeff John Roberts.
And I'm Leo Schwartz.
So, Leo, another busy week in crypto. It's always a busy week. A lot to cover this week. Let's start off right here in New York City, where you were talking to the former mayor, Eric Adams. What was that all about?
Yeah, I used to be a meme coin reporter. I feel like there was a stretch where I was only reporting on meme coins, like the famous Haktua Girls disastrous token. Luckily, we started off this year with a bang. Eric Adams, former mayor of our great city, New York, with his own rug pull. I got to attend a press conference yesterday.
Leo, no, the mayor rug pulled? He did crypto rug pull?
Well, the jury's still out. It had the hallmarks of what we'll call rug pull. So on Monday, I headed down to Times Square with a gaggle of other reporters, where the former mayor announced his New York City token, which was designed to combat anti-Semitism and anti-Americanism and teach the city's youth about blockchain. Not really clear how it would do that. And then Monday evening, he launched the crypto token, and to the surprise of maybe no one, had an immediate what's known as a rug pull, where basically developers associated with the project withdrew about $1 million in profits. And I think people are still trying to figure out what exactly went on.
I'm shocked, just shocked. But you know what I'm mostly shocked at is, who are these people? Like, how many times can you get burned by a meme coin project?
Yeah, I mean, we live in a gambling economy, and I think everybody thinks, this is the one I can outdo everybody else. I can be first into this project. Maybe I can make a quick $100,000. Maybe it was even insiders who got scammed themselves. But I think the dust is settling. We'll find out. The upshot, it really is that there's no necessary rule of law anymore. I mean, the SEC came out and said, basically, look, if you want to invest in meme coins, go ahead. We're not going to do much about it. So I don't know what's going to happen. Hopefully Adams was able to make some money off of it, though.
Well, Leo, I don't live in New York City anymore, but my read on Eric Adams is he was always kind of this shady mayor, and before that, kind of a shady cop who was sort of always on the make for a financial opportunity of some kind or other. And I assume he got out of office and needed some cash, so he ran a rug pull. Is that a crazy surmise?
Well, listen, you can flee back to Vancouver if you need to as a Canadian. I have to stay in New York, so I'm not going to necessarily come out and say that. But I mean, Adams' history with crypto is pretty interesting. He famously said that his first few paychecks would be in Bitcoin. Then he sort of didn't mention crypto for most of his mayoral term until crypto came back into vogue. He hosted a giant summit at Gracie Mansion, the mayoral residence. He was palling around with Brock Pierce, the famous Tether co-founder and Mighty Ducks star. It seemed like he was getting back into crypto's good graces with the idea of raising a bunch of money from them for his failed mayoral campaign. This time around, who knows? Maybe he saw a way to make a quick buck.
Yeah, you got to do what you got to do. Real quickly, what about Mandami? Has he taken a position on crypto either way?
Not really. I mean, he is obviously, maybe we can say a youth. I mean, he's the same age as me, but theoretically more friendly to tech and innovation. Adams did start a blockchain office when he was mayor at the end of his term. It's unclear if Mamdani will continue it. Mamdani did say he would not be buying Adams's token, though.
Okay, probably a good idea. I'm not going to buy it either. Other news this week, something with World Liberty Financial. They're going for a banking charter.
Yeah, so obviously one storyline that we've been following closely here at Fortune has been the first family's entanglement with crypto, from Trump announcing his meme coin inauguration weekend to creating its own stable coin under its crypto platform, World Liberty Financial. There's obviously been a lot of accusations of conflict of interest. I think what happened last week might be the most egregious example yet. There's always been fear of what happens if a Trump project seeks direct authorization under the Trump administration, and that's actually happening now, where World Liberty Financial, which is the Trump's crypto project, is seeking a banking license from the Office of the Comptroller of the Currency, which is a financial regulator that falls under the remit of the Trump administration.
Hasn't the OCC given out other crypto banking charters? They're kind of like, I think, known as narrow banks. Let's just real quick, what's it let you do? You get one of these charter. You can't go and open a bank, and you can't touch deposits, but you get access to the Federal Reserve account, and you get some pretty sweet interest rates, correct?
So you can apply for a master account with the Fed and access to the Fed's payment rails like ACH and FedWire, which is really important. But crucially, why all these crypto companies are applying for banking charters under the OCC is it allows them to do really important things when it comes to stablecoins. So it allows them to custody assets on behalf of clients. It allows them to issue stablecoins, and it will allow them to apply for this Fed access. And like you said, a Fed governor has basically said they want to create a new type of skinny account for crypto or fintech companies that would allow them access to these payment capabilities. And yes, a few crypto companies, after not being able to under the Biden administration, did get conditional approval for these charters under Trump's OCC, including Circle and Ripple and Paxos, and now Trump's is the latest to apply for that.
Yeah, and for that reason, I think like the sky's not necessarily falling. I mean, they have a right to apply like anyone else. But again, given that Trump just tried to take out the chair of the Federal Reserve with a bogus criminal investigation, I would not want to be the OCC official to deny, Don and Eric Trump a banking charter. So I think you might have a fair concern there.
And I mean, even if other ones have been approved, I think you could also make the argument that the reason the OCC is even giving them to crypto companies in the first place is because clearly the Trump administration has been friendlier to crypto. Then you have to ask, why has it been friendlier to crypto? One argument, of course, is that, well, they have a huge financial interest in crypto now. So I think it's certainly something to watch. And I know I talked to one banking law professor, Todd Phillips, who raised the concern that if they start to offer these charters to companies that maybe aren't necessarily qualified, that could lead to broader contagion. So I think this is certainly a concern that is mounting.
Yeah, I mean, fair enough, but both things can be true. I think they're giving these, crypto companies these charters partly because crypto is an important new sector, and the Biden administration had such a knee-jerk effort to like smother it all. So, I'm not quite as cynical about that. I think, it makes sense to try to find a role for crypto companies within the banking system. What else is cooking? Prediction markets. Kalshi and Polymarket are up to stuff again. What's that about?
Yeah, I mean, this blends our two favorite things, which is the gambling economy and financial regulation. So, prediction markets have exploded in popularity over the past year. One of the concerns is that as you have these new event contracts for anything from the score of an NBA game to whether a sitting president will be deposed by a certain date, the issue is that insiders or people who might have access to non-public material information could easily trade on these markets with no real oversight. And we saw widespread concern that this had happened famously now with in Venezuela when U.S. troops went in and snagged the president, Nicolas Maduro. An insider or someone on Polymarket had taken out massive contracts saying that they thought it would happen by the end of January before the news was announced, and they netted over $400,000.
Yeah, buying that yes contract would have been pretty sweet. But you're right, and I just find it interesting. And to be clear, we're talking about this on a crypto show because Polymarket is still on crypto rails. I mean, we're talking about because it's really interesting, but I think it's probably good to pause and say, it seems like a jump ball between the two big companies, Kalshi and Polymarket. Kalshi's kind of taking the buttoned up approach. They say no insider trading. They don't do much on the crypto side, and then their dispute resolution too. But I do think Kalshi and Polymarket have taken different regulatory approaches. I think Polymarket's kind of being more of a gunslinger, playing fast and loose, but we'll see how it plays out. Do you think this approach is going to bite Polymarket, and does Kalshi have an advantage or maybe a disadvantage because Kalshi's just Polymarket's doing whatever it wants?
Well, this is sort of where the crypto comes in, is Polymarket is certainly more of a pure crypto rails company, doesn't necessarily do KYC or know your customer of users. And because of the fact that you can basically fund your bets with USDC, it allows for more anonymity. So when it comes to rooting out insiders, it's certainly more difficult on Polymarket than on Kalshi. And I think now what we're seeing is this mounting backlash from lawmakers after you had this massive rise of the two platforms in the last year to say, wait a second, there's actually no regulation when it comes to this new type of financial asset. We need to figure out how to actually stave off insider trading. And I think with Polymarket, it remains to be clear whether, given their model, that's even possible. And, as you said, Kalshi gives lip service to the fact that they're banning insider trading. Is it actually possible for this tiny regulator that oversees them, the CFTC, to effectively police these markets? We'll have to see.
Yeah, you could also say though, just putting my libertarian cap on, you don't have to make bets on this thing. You don't have to bet on the NBA. You don't have to bet on Venezuela, invasions. And also think free market types. I'm sure I could find lots of people at the University of Chicago who would tell you that this is just yielding more information, and information is good for free market trading. So perhaps there's nothing wrong with this. I'm not saying I have that position, but there certainly is a camp out there who hold that position.
Yeah, well, I spoke with Representative Richie Torres from New York, Democrat, who introduced a bill to combat insider trading, as well as a former CFTC attorney who pointed out that, you know, even if you say you don't have to bet on these markets, or maybe even insider trading is a good thing to be able to get the truth out more quickly, it could theoretically threaten the integrity of markets in general if everybody widely thinks that the White House is betting on the actions they're going to take. Not saying that's what happened, but if that's the general sentiment, it seems like not a good thing.
Yeah, and the incentives too. I mean, I think Polymarket had wagers on the LA fires last year when they'd be put out or something, and people were dubbing them arson markets. Because I think if totally unregulated, you could create some pretty perverse incentives for all sorts of really bad stuff. Okay, moving on. Another topic this week is Rumble has this thing where they're now going to let you the social media platform let you tip content creators in Bitcoin. And I guess I think that's cool and all. I think it's a decentralized project, new use of crypto. I guess my question though is how many people actually tip and pay on social media?
I know other platforms have tried to roll this out. I think Twitter did. Places like Patreon have worked on these models. I mean, it's always been this idea of crypto that it can be used for microtransactions. I think people in media for years have hoped that people can buy single articles using a stable coin or Bitcoin or something. So, I think it's always been an interesting idea. I don't know if it's ever really played out.
Yeah, and I wonder if just the UX has got to get smoother because I like the idea, and also in journalism too. Our readers hate paywalls. As Preston says, I hate them too. I just wish there was a button in the browser where you could just sort of buy the articles a la carte or have like a little counter there. But I'm also, as you said, Twitter's trying to do it. I think they're trying to get something called cash tags. But I'm just curious, like, I think you need an integrated sort of account, and it's got to be kind of a common practice. See something on social media, pay someone rather than just like it. And it's part of it's a technology wasn't really baked into it. It's that 404, what's it, the 403 error. This is getting into the weeds, but the internet was originally designed to do that. And now they're building protocols where you can do that, but consumer behavior is a hard thing to change. So we'll see. Last topic, you and Ben did a big story on Hyperliquid this week. You want to tell us about that?
Yeah, so maybe the biggest success story besides stablecoins and the Trump embrace of crypto more broadly last year was the rise of DEXs or decentralized exchanges. Unlike a Coinbase or an FTX where there's one entity running how an exchange works, a decentralized one is really operated autonomously on the blockchain. And what we saw last year is a huge amount of users rushing into this one called Hyperliquid to trade so-called perpetual futures or perps, which is basically betting on what the future price of a cryptocurrency is going to be without the contract expiring. It's an idea that really became super popular on crypto rails. And this company, Hyperliquid, just exploded with no venture funding, only around 11 employees, probably the biggest success story of last year. And there's another one called Lighter, which is founded by this former Citadel Harvard grad named Vlad Novakovski, who I did an interview with. We're going to watch in a bit. Just a really interesting field to watch. And for now has been a bit contained within crypto and crypto trading. But I think what people like Vlad and Jeff, the founder of Hyperliquid, say is this is going to be the future of markets. Perps can be used in all sorts of other types of assets, such as, Tesla stock or even FX trading. And a lot of global trading can be run on these DEX rails.
Yeah, these are some impressive guys too. And reading your story, I can't believe how buttoned up they are. What's the name? Jeff Yan, the Hyperliquid founder, sort of physics gold medal in high school and some international, competition, Harvard grad, the whole bit. These guys don't mess around. It's so funny, like, because I remember the start of like DeFi summer when it was all about basically vampire tax and launching like coins with different fruits and stuff. And it was very kind of crypto-y and pseudonymous. These guys though are here to play. My only, I guess, question would be perps. I understand what they are. It's sort of an option that doesn't expire. But, I think maybe like 0.1% of the population is going to, maybe higher among our listeners, are going to be trading perps because you have to really know what you're doing. And so I just kind of wondered, but I guess they make so much money, it's going to inform the rest of the crypto sphere. So why are these perp markets so significant?
I think it's just a easier way for, as you said, more sophisticated traders to operate in the markets. When I ask them, are you worried about retail traders coming in, not necessarily having the sophistication to operate in the markets? They say, no, it sort of forces you to learn what's happening, but it can certainly be incredibly dangerous. We saw this massive flash crash liquidation in October, much of which was happening on these DEXs. where people lost hundreds of millions of dollars.
Yeah,
So
and
yeah.
I mean, if you're playing this game, you can get like 50x leverage and stuff, and you can do the same on Binance and other centralized exchanges. But again, yeah, this stuff is not for amateurs. But I mean, I write about mainstream investing too, and I even tell people like, don't go trading options because your counterparty is going to be some guy with like a PhD in math who's eating you for breakfast. So, but it's a free country. If you want to knock yourself out, trade perps, trade options. But if you lose your money, don't cry too much. Anyways, you sat down with Vlad of Lighter, correct?
Yeah, so we're gonna watch that now, and I think he has some really interesting insights into where not only crypto markets are headed, but maybe TradFi as well. It is great to be joined here today by Vlad, who's going to help us understand the future of decentralized exchanges, or whether DEXs are going to be the future of finance. So, Vlad, I'd love to start off. I mean, why did you decide to start Lighter, and why do you think DEXs really are the future, not only for crypto but for finance in general?
Hey, yeah, good to be here. So we started building Lighter around 3 years ago, kind of right after, or right around the time of the FTX collapse. And even before that, we kind of had a sense that all the technology that is enabled by blockchain and zero knowledge proofs and all of that like can allow us to build something that's fast, cheap, but also verifiable and secure. And after seeing how kind of centralized exchanges can fail, it was pretty clear why that's the best long-term solution.
So it's funny to see FTX as this pivot for a lot of people, both in crypto and outside of crypto. I mean, obviously, it was a huge calamitous collapse that might have turned a lot of people off from blockchain. But I know folks like you say, no, the issue was that it was centralized. It wasn't actually using the strengths of blockchain technology, which means that this can be independently verified. It's not controlled by any single entity or person. And I think what's interesting about your background is you weren't even really in crypto before this, right? I know that you have a background as a more traditional trader at places like Citadel, and you're working in AI. Maybe you can talk some more about your decision to come into crypto and to build this new exchange that would bring other people back into crypto and sort of learn from the mistakes of FTX.
Yeah, so I started my career in TradFi, as you said, initially at Citadel, doing, quant trading, high frequency trading, and then moved to Silicon Valley, around 2012, right, to work primarily on AI and fintech too. And yeah, so I read the Bitcoin paper and kind of stayed on top of what was going on in crypto and blockchain. And so we were already thinking about like what are some opportunities to build in the space. And I think it became pretty clear, like by 2022, that the problem of building an exchange actually hasn't really been solved, in the sense that, yeah, like 99% of the activity was happening on centralized exchanges that don't actually use, blockchain at fundamentally. But I think there's some really big technological shifts that happened initially with Bitcoin, and then with zero knowledge proofs, where you can compress a lot of data and prove a lot of things in a small amount of block space. And so I think those are really big technological achievements. So I think like when you build at the, if there's like a big technological shift, whether it's mobile or AI or, or crypto or zero knowledge proofs, right? If you kind of take that big technological shift and then see something where there's actual, customer demand, and that's not kind of the best times to build in the space, right? So I think for us, it made a lot of sense. And the fact that a lot of people were leaving the space was maybe actually a good thing, because it was a bit of there was less noise, and you could kind of, be heads down and build and talk to the actual customers, as opposed to people who are maybe not in the space for the right reason.
Let's talk about the one product on DEXs that is the overwhelming majority of trading and popularity for traders. I mean, it's this pretty technical product, perps or perpetual futures, that is really native to crypto, that is not just betting on the price of Bitcoin, but it's betting on the future price of Bitcoin. And unlike traditional futures contracts, it doesn't expire in the same way. Why do you think perps have grown so much in popularity and really become this hallmark of dexes like yours and your main competitor Hyperliquid and Aster?
Yeah, so actually the idea for perps didn't start with crypto. I think it was in the 90s that I believe it was Robert Shiller, like an economist, who proposed it. And I think what was interesting is like it's a lot faster to innovate in crypto than in TradFi. So I think a couple of years in after, like, I guess, the first crypto exchanges were spot only. It was like 2011. By like 2014, perps were introduced. And so that was like very fast, right? But essentially the idea, right, is that instead of having to, these kind of traditional futures have maturity date and then you have to roll them over. And like most of the time, I mean, sometimes they are actually used for physical delivery, right? Like we've heard of these cases where like a trader actually gets like oil delivered to them. But most of the time that's not the intended use case, and it's more to hedge an existing position, or to if you're making prediction on the price, you want to use leverage to execute on that prediction. So you don't really need, like, this process of having to roll over every 3 months is kind of inefficient. And so I think some of the early crypto exchanges kind of pioneered this and it caught on. I think there's some things, with the market design you have to be careful about, like how much leverage you can take on in different products. There's also this whole question of auto deleveraging, right? Because like in TradFi, if more money is lost than what's in the system, you could kind of, like if everyone is a known entity, that you could claw it back kind of through through the banking system or the legal system or whatnot, right? Like in crypto, that's not, like, if there's only a certain amount of money in the system and then more is lost than that's there, like there has to be some mechanism to adjust for that kind of deleverages everyone. So that's this whole ADL thing that came up on October 10th. But that's another part of the market design when it comes to perps. But so it's not, there are challenges with it too, but overall it's really good because, it's an efficient way to take on leverage. You don't have to worry about, rolling over positions, and you can trade a variety of asset classes kind of, in a capital efficient way. Starting out with kind of digital, native crypto assets like Bitcoin, but eventually, like for example, right now in Lighter, we have FX, we have some equities as well, and there's going to be more to go with kind of perps on real world assets. One interesting thing is I've heard from friends and TradFi, like, we wish we had, we were trading these instruments, right? And hopefully that'll actually happen, like this year, with a lot of the regulatory language being worked on, in the US. Like hopefully, like, there will actually be ways for US institutions, like the ones where I used to work, to actually trade these markets through perps.
Yeah, and I appreciate the fact check. I should have said the idea is not native to crypto, but its growth or implementation is certainly native to crypto, which leads to my next question. Do you think that perps or DeFi tools or different instruments that exist for crypto traders on DEXs will go more mainstream? Will they be able to tackle traditional equities like Apple stock or Tesla stock, or will they start to be implemented more outside of crypto, do you think, in 2026?
Yeah, I mean, I think there's going to be this kind of like merge between DeFi and TradFi in the coming years. And I think the exact path of that is still a bit unclear, right? But I think, for example, we're working on a project with Robinhood, right, where they've announced tokenized stocks. That's not actually perps, right? That's actual spot assets, and so you'll be able to trade those on Lighter in the coming months. So that's one example, right? I mean, I think you can have perps on top of those. You can even have perps on top of like equities that are private, right? Like you can have like an OpenAI perp, which I think some of our competitors already have experimented with. So yeah, so I think some of this stuff will work, some of it won't, and there's question of what do the regulations look like? Maybe some of this, maybe is there some form of like on-chain KYC that you need there probably should be some rules, right? Like, but it's not the same as like rules from TradFi from 50 years ago, right? But like, should somebody be trading, a meme coin at 1,000x leverage? Like, probably not. And I think most reasonable people in the industry don't want that in the first place. But but at the same time, like, the regulations created for TradFi 50 years ago also don't exactly apply. So there's going to be some path towards that. And yeah, I think hopefully we'll see this year like institutions actually starting to trade perps in some meaningful way, and then we'll move closer to DeFi and TradFi converging.
I want to ask about your competition because I think the biggest story, or one of the biggest stories in crypto last year, was Hyperliquid, which is another DEX that just exploded in users and growth. I know that they had a bit of a head start on you, and your advantage or value add different than Hyperliquid is that you're built on top of Ethereum, and I know that you've been catching up in terms of volume. But I'm curious how you see the DEX landscape playing out in this coming year.
I think that's accurate. We started building around the same time, right? Like late 22, early 23. And so, from our perspective, like we had goals that we wanted to achieve, which are low cost, low latency, secure, verifiable, composable. And the tech necessary to achieve all five of those, it took a while to build. So we were a bit later to market than, let's say, Hyperliquid was. But I think because the security layers through Ethereum, that also opens up composability with the rest of DeFi, right? So there's like over 100 billion of assets on top of Ethereum already. And so instead of kind of rebuilding that ecosystem, what Lighter is able to do is to say, okay, we can actually plug in a really efficient exchange within that ecosystem and kind of inherit the security. I think there are a number of advantages to building on top of Ethereum, and we solved maybe the harder technical problems first, which took a while, but now those advantages will help growth. I mean, it'll be in terms of existing DeFi, right? Like, I think also it's like when you look at some of the more institutional players, like they're a lot more comfortable with Ethereum security, but also especially like TradFi, right? Like if you're thinking about how would like a traditional bank or hedge fund like custody their assets, I mean, I think they're going to be a lot more comfortable with Ethereum as the base layer, which has been around for over 10 years and has been kind of secure and reliable throughout that time, as opposed to kind of a new L1 that might be working quite well for their customers, but it's still, I think you want the security layer to be the most reliable possible, and then you want the execution layer to be as efficient as possible, is how we think about it. But yeah, so we think there are a lot of advantages to this architecture, and we kind of solve some of the harder technical problems first, and then now it'll be accelerating from here.
Okay, Vlad, last question, the $1 trillion question. You brought this up earlier, but obviously in October, we saw the flash crash in crypto prices. Bitcoin has not quite recovered and gone past $100,000 again. Volume on DEXs is still down from where it was in the middle of last year. Obviously, I would imagine that you think crypto prices are going to do well this year and markets are going to recover. But what do you think is going to happen in 2026? And why do you think there's a bull case for crypto, if there is one?
Yeah. I mean, I think that, last year there was a lot of maybe too much leverage in the system, and that, time needs to pass for that to flush out and kind of for positions to start to be constructive again. But I think the macro story to me, right, is this unlock of regulatory clarity that's going to happen in the US, right? Like, to me, that's going to open up kind of the biggest financial market to these technologies. And I think we're seeing like, it's pretty amazing, right? Like, you're seeing traditional players like Jamie Dimon now understanding the value of blockchain, and people who only a few years ago were saying that the whole thing is a scam. So, and you're seeing, that there's kind of movement in the Senate and the House on some of the bills there, right? Like new CFTC commissioners. So I think if you look at US, like there's a really good story here. I think if you look outside the US, there are other countries are starting to, we spent a bunch of time in Asia towards the end of last year. I think there's similar things happening there, maybe a bit, following the US, but also I think like just more and more people are becoming comfortable with the tech. It's like we talked about our competitors. I think there are a lot of like serious people kind of building in the space now. It's not kind of, I think the earlier era had a lot of, maybe too much risk. Now we're really like building some serious infrastructure. So I think even globally, like there's a really good story, but especially in the US, this kind of, TradFi and DeFi merging, I think that's very bullish.
Well, it's going to be an exciting year regardless. Vlad, appreciate you joining us here today.
Thank you so much. Great to be here.
Wow, that's one smart dude. Interesting interview, Leo. What were your biggest takeaways from that?
I mean, one I think is the argument for how these types of markets can break containment and get beyond crypto. And then the other, as I've said, I think we're in this sort of strange period with crypto markets. So this argument he makes for bullishness ahead and why Bitcoin is going to recover and thrive in the coming year.
Sounds good. Okay, everyone, that's a wrap. Thanks as always for tuning in. I'm Jeff John Roberts, finance and crypto editor of Fortune Magazine.
And I'm Leo Schwartz, senior writer at Fortune.
We'll see you next time.